The big stock investment update is here. In the ever-shifting world of the stock market, investors are constantly on the lookout for lucrative stock picks. While the average investor might feel overwhelmed by the sheer volume of options and conflicting advice, there's a select group of individuals whose moves are watched with hawk-like intensity. And these are super investors like Warren Buffett, Ray Dalios, Seth Karman, and Bill Ackman. Whether you're a seasoned investor looking to refine your portfolio or a curious newcomer seeking inspiration, the insights gathered from these super investors could prove invaluable. In this video, we'll be unveiling 7 top picks that these super investors have been buying lately. Before we dive in, show your appreciation by clicking the like button below, subscribe to the channel, and turn on notifications for more valuable content. Number 1, American Express, AXP. American Express, the revered financial services corporation, has long been a favorite of super investors, most notably Warren Buffett. But what makes this credit card giant so appealing in today's market? First and foremost, American Express has a premium brand that resonates with affluent consumers and businesses alike. This positioning has allowed the company to weather economic storms better than some of its competitors, as its customer base tends to be more resilient during downturns. Super investors are likely drawn to American Express's strong fundamentals and consistent performance. The company has demonstrated an ability to adapt to changing consumer behaviors, particularly in the realm of digital payments. Its investments in technology and partnerships with popular brands have helped it maintain a relevance in an increasingly competitive fintech landscape. From a financial perspective, American Express has shown impressive discipline in managing costs while continuing to invest in growth initiatives. Its focus on increasing customer engagement and attracting younger consumers bodes well for long-term sustainability. Super investors may also appreciate the company's commitment to shareholder returns through dividends and share buybacks. This balanced approach to capital allocation demonstrates management's confidence in the business model and commitment to creating shareholder value. Number 2, Occidental Petroleum Corporation, OXY. In a world increasingly focused on renewable energy, it might seem counterintuitive for super investors to be bullish on oil and gas companies. However, Occidental Petroleum has garnered significant attention, particularly from Warren Buffett's Berkshire Hathaway, which has built a substantial stake in the company. So, what's driving the interest in Occidental? First, it's important to recognize that despite the push towards green energy, oil and gas will remain crucial components of the global energy mix for years to come. Occidental's position as a leading producer in the Premium Basin, one of the most productive oil fields in the United States, gives it a strong foothold in the essential industry. But super investors aren't just looking at Occidental's current production capabilities. The company has made significant strides in positioning itself for a lower carbon future. Occidental has become a leader in carbon capture and sequestration technologies, which could prove immensely valuable as the world grapples with climate change. From a financial perspective, Occidental has made impressive progress in strengthening its balance sheet and improving operational efficiency. The company's acquisition of Anadarko Petroleum, while initially viewed as risky due to the high debt load it entailed, has started to pay off as synergies are realized and debt is paid down. Here's another thing. Occidental's management has demonstrated a commitment to returning value to shareholders through dividends and share repurchases, a strategy that often appeals to value-oriented super investors. Number 3, Johnson & Johnson, J&J. Johnson & Johnson, the multinational corporation known for its consumer health products, pharmaceuticals, and medical devices, has long been a staple in the portfolios of super investors. Its appeal lies in its diversified business model, strong brand recognition, and consistent financial performance. One of the primary reasons super investors are drawn to Johnson & Johnson is its stability. The company has increased its dividends for 60 consecutive years, earning it the coveted status of Dividend King. This remarkable track record of returning value to shareholders through various economic cycles demonstrates the resilience of J&J's business model. The company's diverse portfolio of products provides a natural hedge against market fluctuations. While one segment may face challenges, others can often compensate, providing stability to overall earnings. This diversification extends across geographies as well, with J&J operating in virtually every country in the world. Super investors likely appreciate J&J's strong position in the healthcare sector. an industry with favorable long-term growth prospects due to aging populations in many developed countries and increasing healthcare access in emerging markets. The company's robust research and development pipeline, particularly in its pharmaceutical division, positions it well for future growth. Johnson & Johnson's financial strength is another key attraction. The company maintains a AAA credit rating shared by only one other US company, which speaks volumes about its financial stability and management's fiscal discipline. Moreover, J&J has shown a willingness to evolve its business model to stay competitive. The recent announcement of its plans to spin off its consumer health division into a separate company demonstrate management's commitment to unlocking shareholder value and focusing on high-growth areas. While no investment is without risk, super investors seem to view Johnson & Johnson as a reliable cornerstone for a well-balanced portfolio, offering a mix of stability, income, and growth potential. Number 4. Humana, HUM. Humana, one of the largest health insurance providers in the United States, has caught the attention of super investors for several compelling reasons. As the healthcare landscape continues to evolve, Humana's strategic positioning and growth prospects make it an intriguing investment option. One of the primary attractions of Humana is its strong focus on the Medicare Advantage market. As the U.S. population ages, the demand for Medicare Advantage plans is expected to grow significantly. Humana's expertise in this area and its strong market share positions it well to capitalize on this demographic trend. Super investors are likely impressed by Humana's consistent financial performance and its ability to navigate the complex regulatory environment of the healthcare industry. The company has demonstrated a knack for balancing growth with profitability, maintaining strong margins even as it expands its membership base. Humana's investments in technology and data analytics are another point of interest. The company has been at the forefront of using data to improve health outcomes and reduce costs, a crucial factor in maintaining competitiveness in the healthcare sector. Its focus on value-based care models aligns well with broader trends in healthcare reform. The company's expansion beyond traditional insurance into areas such as pharmacy benefit management and home health services provides additional avenues for growth. This vertical integration strategy not only diversifies revenue streams, but also gives Humana more control over the total cost of care for its members. From a financial perspective, Humana has maintained a strong balance sheet and has been consistent in returning value to shareholders through dividends and share repurchases. This disciplined approach to capital allocation is often attractive to value-oriented super investors. Number 5. Amazon, AMZN. Amazon, the e-commerce and cloud computing giant, has long been an appealing option for growth-oriented investors, but it's increasingly catching the eye of value-focused super investors as well. What makes this tech giant so appealing across different investment styles? First and foremost, Amazon's dominant position in e-commerce continues to be a major draw. The company's relentless focus on customer experience, vast product selection, and efficient logistics network have created formidable barriers to entry. As consumer shopping habits increasingly shift online, Amazon stands to benefit significantly. However, its Amazon Web Services, or AWS, the company's cloud computing arm, that really excites many super investors. AWS is not only the market leader in cloud services, but also the primary profit driver for Amazon. As businesses across all sectors accelerate their digital transformation efforts, AWS is well positioned for continued growth. Amazon's foray into new sectors also presents intriguing growth opportunities. From healthcare to grocery delivery to entertainment, the company has shown a willingness to disrupt traditional industries. While not all of these ventures will succeed, the potential for Amazon to replicate its e-commerce and cloud computing success in new areas is tantalizing for investors. Super investors may also be attracted to Amazon's culture of innovation and long-term thinking. The company's willingness to forego short-term profits in favor of investments in future growth aligns well with the philosophy of many successful long-term investors. From a financial perspective, Amazon has shown improving profitability in recent years, particularly as AWS has grown and e-commerce operations have achieved greater scale. The company's strong free cash flow generation provides it with ample resources to fund growth initiatives and potentially return value to shareholders in the future. While Amazon's value has often been a point of contention, Many super investors seem to believe that the company's competitive advantages and growth prospects justify its premium. As Amazon continues to expand its ecosystem and leverage its vast data resources, it remains a compelling option for investors seeking exposure to multiple high-growth areas of the digital economy. Number 6. Alphabet, GOOGL. Alphabet, the parent company of Google, has become a staple in the portfolios of many super investors, and for good reason. The tech giant's dominant position in search, digital advertising, and emerging technologies makes it a compelling investment option in today's digital-first world. At the core of Alphabet's appeal is its near monopoly in the search engine market. Google's search engine is so universal that to Google has become a verb in everyday language. This dominance translates into a massive advertising business, which continues to be the company's primary revenue driver. As digital ad spending grows, particularly in mobile and video formats, Alphabet stands to benefit significantly. But super investors are likely looking beyond just the advertising business. Alphabet's diverse portfolio of products and services, including Android, Chrome, Gmail, and Google Maps, creates a powerful ecosystem that keeps users engaged and provides multiple touchpoints for monetization. YouTube, which is owned by Alphabet, is another major attraction. As video consumption continues to skyrocket, YouTube's position as the world's second-largest search engine and a premier destination for video content positions it well for long-term growth. Alphabet's investment in emerging technologies also excite many investors. The company is at the forefront of artificial intelligence and machine learning, which not only enhance its existing products, but also open up new business opportunities. The company is growing rapidly and represents a substantial long-term opportunity for smart investors. From a financial perspective, Alphabet possesses a rock-solid balance sheet with a massive cash hoard and minimal debt. This financial strength provides the company with ample resources to invest in growth initiatives, pursue strategic acquisitions, and return value to shareholders through stock buybacks. Number 7. Nike, NKE. Nike is another stock these super investors have been buying, and here are the reasons. First and foremost, Nike's brand strength is unparalleled in the athletic wear industry. The swoosh logo is recognized worldwide, allowing Nike to command premium pricing and maintain strong customer loyalty. This brand power provides a significant competitive advantage and has helped Nike weather various economic cycles. Super investors are likely drawn to Nike's demonstrated ability to adapt to changing consumer preferences and market conditions. The company has successfully navigated the shift towards casual and athletic wear in everyday life, a trend that accelerated during the pandemic. Nike's focus on innovation in both product design and materials keeps it at the forefront of performance athletic wear, while also appealing to fashion-conscious consumers. From a financial perspective, Nike has demonstrated strong and consistent performance. The company has a history of delivering solid revenue growth, improving margins, and generating robust free cash flow. This financial strength allows Nike to invest in growth initiatives, return value to shareholders through dividends and share repurchases, and maintain a strong balance sheet. Super investors may also appreciate Nike's increasing focus on sustainability. The company's efforts to reduce its environmental impact and improve labor practices in its supply chain not only address potential risks, but also appeal to increasingly conscientious consumers. For super investors, Nike represents a high-quality company with a proven track record and significant future growth potential. These 7 stocks represent a diverse range of sectors and investment strategies. While they've caught the eye of super investors for various reasons, it's crucial to remember that every investment carries risks, and what works for one investor may not be suitable for another. Thanks for watching this video to the end. Let us know your thoughts in the comments section, and don't forget to like and subscribe for more valuable content.